Jamie Keach from Resource Insider, and I'm here today with Kim Bergen, the Director of Capital Markets from Sandstorm Gold. We're going to talk a little bit about Sandstorm, what they've done over the last 10 years, and what we can expect from them in the next 12 months. So, Kim, thanks for sitting down with me for a few minutes.
Thanks for having me, Jamie.
So, for people not familiar with Sandstorm, can you give us the 30,000-foot view of what Sandstorm is and what you guys do?
Sure. So Sandstorm's a royalty and streaming company. So what we do is we help finance mining companies. We'll provide financing up front, either for a royalty or a stream. And they'll use that capital to move the project into production. Once in production, Sandstorm will receive a percentage of revenue if it's a royalty, or a percentage of production if it's a stream, for the life of the mine.
Okay, and what's your role at Sandstorm?
My role at Sandstorm is I'm helping manage our existing portfolio of assets, so 190 streams and royalties, as well as working with shareholders on the retail and institutional side.
Okay, so Sandstorm has been around for about 10 years now, am I right on that?
That's correct.
And what have you guys done over the last 10 years? You're just over $1 billion market cap, or?
We're about 1.2 billion US in market cap. So when Sandstorm started, we didn't have any deals. So unlike a lot of the royalty and streaming companies who started with a royalty kind of spin out from another company, Sandstorm started with zero. So found the deals, and now we have 191 streams and royalties.
And you guys have gone up, I think, about 50% in the last 12 months. Is that right?
About that, yes.
So what's happened over the last year, besides seeing a more favorable gold environment, that's allowed you guys to have that growth?
So in the fall of 2018, we announced a large share buyback program. So our board had analyzed, where Sandstorm trading in terms of, what we believe our internal value is, and compared it to the other streaming and royalty companies. And we found we were trading at a discount. And so looking at the different ways to allocate our capital, we decided that, initiating a share buyback program was, one of the most accretive ways to use the cash flow that we had. And so board approved a buyback of about 10% of our shares outstanding. So for most of 2019, really heavy in the first half, we started buying back our shares, and have bought back at prices much lower than where we're trading today.
A lot of your competitors in the space, they pay a dividend. You guys don't. Is there a reason for that? Is there an advantage to that? Did the share buyback program have anything to do with that?
Definitely. So probably the last 10 years, all of our cash flow and capital we've used to continue to grow the company, become more diversified, stronger cash flows, and a stronger growth profile. We decided, given where our share price was trading, that the share buyback was the most accretive way to also allocate the capital. And so I'd expect, in the next few years, we'll be looking at a dividend again, because we have, a stronger portfolio with the growth built in. So, I think it's something in the future you could expect. Probably would be small to start.
So when we look at a streaming and royalty portfolio, we might be looking at what would be considered growth assets that are non-cash flowing, that have potential for the future. Then we have cash flowing assets. How is yours split up, and are you guys happy with that? Are you rejigging that for the future? What's the plan there?
So right now, 23 of our assets are cash flowing. We probably have about 25 to 30 in the development phase, a chunk of advanced exploration, and the rest in exploration. So I'd expect over time and over the next few years, you're going to see more of those assets in production. But the real strategy right now is to, new deals. We're looking for things that will be cash flowing in the next 12 months to try and bring more of that value into the cash flowing kind of section of our asset value, because that's really where the market, sees the value, and a bit different between us and, the larger streaming companies, the Francos, Royals, Wheatons, have more of their assets in production today, versus we have more kind of in the growth in the development phase.
So if I'm an investor at home, I don't own any royalty or streaming stocks, what are some of the advantages of Sandstorm to, say, some of your other competitors? Why would I put money into Sandstorm Gold?
I would say why you would rather invest in Sandstorm versus one of the larger ones is Sandstorm has more growth in our portfolio. We're probably going to double production by 2023. We are trading at a discount today if you're looking at on an enterprise value to EBITDA comparison, as well as more upside. So with our portfolio, we try and invest in projects that have large land packages, room to grow, and exploration potential. And so what we have seen is a lot of our producing assets are spending, tens of millions of dollars a year on exploration, and they're adding ounces to reserves and resources, which are extending the mine life, which as a shareholder, you're getting access to that extended mine life without having to, pay any additional capital.
Okay, well, Kim, as you know, I'm a big shareholder of Sandstorm for my own portfolio. I'm excited about what you guys are doing over the next year, and I'm very happy with how things went over the last year. So thanks for taking the time to sit down and chat with me and all of our viewers at home.
Thanks, Jamie. All right.